I know there's been a huge concern about sustainability assurance as a topic and particularly as a question in advanced audit and assurance. Through this video, we're going to look at how interesting and easy this topic is. We're not going to be talking about knowledge a lot because that aspect has been covered in a separate video. We're just going to be looking at how that knowledge can be applied to a scenario from the past exam. At the moment, this is the only published question on sustainability assurance, and this is from the September-December 2024 ACCA exam. We'll just start reading through the key parts of the information. You could always pause the video and read through this in your own time. Very quickly skimming through the key points, it is the 1st of July. You've recently completed the audit of this client for the year ended 31st March, and the audit report was issued last week. So this is not an external audit question, but we are going to be using some audit work from external audit in this scenario. The company is a listed drinks manufacturer, and they have approached your firm to carry out some additional assurance work on the company's sustainability report. So remember, in the sustainability report, companies would be reporting on their environmental, social, or governance aspects. The firm has a reputation of high standards in extended external reporting engagements, and they have a separate team who specialize in sustainability assurance engagements. So when we get to that requirement, we can and we need to link the fact that the firm already has existing expertise. Remember very quickly, as sustainability assurance providers, we need to have expertise on assurance skills as well as sustainability matters. So just being a good auditor or having assurance skills is not enough. You need to have sustainability information, or you could basically be getting the help of an expert to get that. They have given two exhibits. The first one is the sustainability report, which is really the subject matter of my engagement. And the second one is quite interesting. They have given extracts from the recently completed audit file, and we are going to use that information to match with the sustainability report and see whatever they've written in the sustainability report makes sense. Now, as far as the requirements are concerned, the first one says, by the way, the first part was actually knowledge based, so I've excluded that. We're focusing on the remaining two parts. So using information in both the exhibits given, you have to discuss the issues which might arise in accepting the engagement to perform sustainability assurance on this report. Sorry, assurance on this sustainability report. So after having read the scenario and taken some time to plan my answer, I am going to spend about 11 minutes in writing the answer. So that's 7 times 1.5, and try and come up with 7 well-explained points. For second part, which I'm going to do later, it is now the 10th of July and the firm has accepted the engagement to review the report, and you have to critique the information given in the sustainability report by the management, commenting on where the team should apply professional skepticism. So there's going to be information given. I am going to look at this analytically and in detail. I'm going to try and figure out whether that information makes sense in light of other facts that are given in the scenario. Excluding the reading and planning and highlighting time, and of course the worrying time, I am going to spend about 12 minutes and come up with 8 well-explained points. We're now going to start reading this information, and as I read this, I'm going to start annotating on the screen at the moment, but in the exam, this is the thought process that you should be going through. So we're starting off with the first exhibit, which is sustainability reporting. There are no current legal requirements to disclose information on waste, recycling, and sustainability measures in the country in which the client operates. Now, this automatically means that there is no defined suitable criteria or benchmark that has been used to prepare that sustainability information. So I'm going to keep that in mind because that means they've either used maybe an external industry benchmark to prepare that report, or that suitable criteria is internal, which could require a lot of judgment and therefore a higher risk. So for financial statements, our suitable criteria is IFRS, but for sustainability reporting, because this is relatively newer, and this is a particular jurisdiction, they don't have a defined criteria. The suitable criteria, remember, could have been something given by law or something which is accepted in that industry. So that's just the first sentence. However, management has decided to publish a sustainability report for the very first time. Now, the minute I see this, there are quite a few concerns for me as the firm. They're not likely to have very strong controls because they're doing this for the first time. We're talking about controls that are needed to report that sustainability information. The evidence that they might have or they have used to record that information might not be reliable, it might not be sufficient, etc. So these are the things that are coming to my mind as I see the fact that they are preparing the report for the very first time. This is due to increasing public and media pressure, and this industry or drink companies are facing growing criticism of the impact of these discarded bottles. Now, I should be very careful about talking about management bias. There are a lot of points here. There's a concept called greenwashing, which is similar to financial statement manipulation. This is when you try and present a nicer picture of your sustainability impact as opposed to the reality. So management bias could mean I'm just focusing on the good parts and nicely, sneakily excluding the bad parts of my impact on the environment. It could be like I'm reporting on elements which are factually incorrect or simply a lie. So they now have a valid reason for trying to manipulate the sustainability report. I'm going to pick those up as I proceed with reading the question. The company also signed up for this certificate, which is called the RGW certificate. The company is required to report on non-key financial measures because they have to meet the strict criteria. And as a part of that certification, they must demonstrate improvements on recycling targets. So I haven't read the rest of the scenario yet, but I know there's going to be a concern because their certification or renewal of that certification is linked to improving recycling targets. So again, another valid indicator that I could link to my answer one way or the other. For periods ended the 1st of January, the RGW has made it a requirement that they need to get assurance on their sustainability statements. So basically, the company asking for assurance on their report is a requirement of this certification, which means that RGW could be a user of my assurance report. Remember, we're looking at factors to consider or matters that need to be considered when we are accepting this engagement, and one of that is going to be who the users of my report are. So really, I'm just on the first screen and I have my first 5 marks out of 7, by the way. Moving on, so we have then further extracts given. I'm going to read through this in detail for the second part of the requirement. At the moment, the only thing that I need to be worried about or that stands out is the fact that they have changed the way they present their recycling information. So last year, it was percentage of lift up bottles recycled. This time, they've reported the number of bottles recycled. So they've changed the way they present this metric and they haven't given comparatives. And in the explanation, they've said they think this is going to be more transparent. But once again, because I have valid indicators of management bias, I'm concerned this change has been done so that they could greenwash their sustainability information. So I'm going to try and link that to my answer. We have further information and then again gives me more marks here. The board has future plans for expanding. They need additional finance from Greentree Bank, and this is a bank which lends only to RGW certificate holders. I have 2 additional marks here. There is another indication that again, a valid indication that I'm going to manipulate my sustainability information so that I can get this money. And green tea could also be a user of my assurance report. So now in my answer, my users could be the management, the body which gives the RGW certification, and this bank. So I'm going to try and link all this information in my answer. The audit of costs, all of that, we'll look at that in detail when we get to part B. We're just focusing on the first part, which is acceptance considerations. I'm going to be getting more marks here for the first note. This is again what we spoke about earlier. Sales have gone up. There is increasing competition. The market share has decreased, and the management is confident that the presentation of the sustainability information is going to reverse the trend. So there is a concern regarding the company's ability to be competitive and, gain their market share back, and therefore their positivity is going to affect management bias or the risk that that sustainability information is manipulated. So that's another discussion point. I'm going to mark that as I read through this information. And then I have concerns about management integrity because the information that was requested was not given. So any indication about management bias or integrity increases the risk of accepting that engagement, and that is a very important factor that needs to be considered before you decide whether you want to accept this engagement. With all this information in mind, I'm actually ready to come up with an answer to a lot more than 7 marks, but I've just summed this up here. I'm going to talk about the subject matter. I'm going to talk about the suitable criteria, not mentioned, but a super easy 1 out of 7. I'm going to talk about a clarification on the level of assurance that can be given. This could be a limited or a reasonable assurance engagement. It could be either. I need to talk about the uses of the report. I'm going to try and get quite a few marks about the level of risk and management bias, and then of course get my easy marks by talking about expertise. I'm just going to write this here. Remember, as the engagement team, we need to make sure we have assurance expertise, and then we should also have expertise on sustainability matters. And if you don't have this yourself, you could get the help of an expert as well. So just remember this for any similar questions going forward. We can now start coming up with the answer. I'm just going to go through this very quickly because we've discussed most of these, but just to tell you where the marks are. The engagement letter, or at the acceptance stage, the scope has to be clarified. This needs basically a clarification on exactly what the subject matter is and what the suitable criteria is. I need to clarify whether this is a limited or reasonable assurance engagement. And because this is a separate engagement from external audit, it should be explained in the report if there are any limitations of the conclusions that you come to as a part of the assurance engagement. So we are starting off by saying that this needs to be clarified. Super easy, straightforward marks. In terms of the users of the report, they need to be clarified. It could be RGW, it could be green tea. There are concerns by association that my reputation as a firm could be affected if I end up giving a report to say, or a conclusion to say, that this report is correct, and later on if the company is found to have breached the terms of the agreement with the certification or that certification body. So it's not just about clarifying the users, it's also being concerned about the reputational impact and potential legal impact if I end up giving the wrong report. So we can link that to my information given in the scenario. Remember, we're looking at any quality or other professional issues that need to be considered in accepting this engagement. We then have a discussion around the internally generated benchmarks. Because they do not have to comply with a specific law, it is likely to be internal or internally developed. So the benchmark or the suitable criteria that was used to prepare that report. As auditors and as the company, they would have applied a lot of professional judgment. We'll need to evaluate whether that judgment is reasonable. There might be specific external industry benchmarks that the assurance team might not have the knowledge of. So remember, it's my life as a firm or practitioner is easier if there are laid out standards or reporting frameworks. But for sustainability assurance, because this is still a rapidly growing field, there are no laid out benchmarks, or particularly for this question, and therefore the risks are higher, which automatically means my marks are going to be easier to get. So I can talk about the concerns regarding the benchmarks that might have been used to prepare the report. We then talk about the level of risk. There are a number of discussion points that you could be discussing. So I need to know or have an understanding of the level of controls that they have that were used to prepare that information, because if their systems were weak, chances that that information is incorrect are higher, and then again that increases the risk of me giving the wrong conclusion. I would be concerned about the source and reliability of the evidence that has been used to prepare that sustainability report. I need to be very clear about applying professional skepticism and judgment, particularly when there are areas of estimation and if there was any information in my report that was obtained from third parties. So not relevant to this question, but for example, if there was a sustainability metric that has been published based on information that I got from a third party, the practitioner will have to rely on that work, and then of course that decreases the sort of reliability I can place on that particular evidence, because I'll be going through a number of channels to get that information. I'll have to see if an expert is needed, if that subject matter is complex, and all of this is going to affect the time and resources that I need to accept and continue this engagement. So this level of risk is basically going to affect my acceptance decision. We've already spoken about this. There are lots of indicators of management bias, which translates into lots of easy marks. I'm concerned about the certification. I'm concerned about the change in metric. I'm concerned about management integrity. Please do make sure you mention greenwashing and explain it. This gets you super easy marks. So management bias could basically result in greenwashing, which is basically presentation of information in a way which is more favorable. So this is similar to manipulation in the financial statements. And another indication is the increasing competition from the competitor. So all of these points could basically be linked to a higher chance that the information could be deliberately misstated. We then wrap all of this nicely up by talking about the professional expertise and external experts if needed. So the engagement leader or partner must have assurance skills as well as sustainability matter skills. And they do have expertise within the firm because it's given in the scenario. However, you still need to consider whether an independent expert might be needed. Just to quickly reiterate something that you should already know from the rest of your preparation for AAA, for most of these marks, you're getting your technical marks, of course, but for some of them, you're automatically getting your professional skills marks. So when you identify that there are concerns about management bias, when you identify that an expert might still be needed, in spite of the fact that they have internal expertise, all of these get you your additional professional skills marks. So super easy, all logical and quite interesting. Moving on to the second part, this is the important part, but entirely scenario linked. You have to put on your hat of a person who has the assurance information. So you don't really need sustainability matter expertise for part B. You really just need to be a good auditor. You should be able to critically evaluate information, compare it with other facts which are given and see if it makes sense. So I'm going to critique the information provided and apply professional skepticism for about 8 marks. So I'm going to start off with, I know this is quite small on the screen, you can just maybe make it bigger, but I wanted to make everything sort of stay on one screen. This is the thought process that should be coming to your mind. I'm going to start with the first part. Let me just change the color. Okay, so let's start with the first part. They've given the total number of bottles and they have gone up from 13,700 million to 15,400 million. And the percentage of recycled material used in the manufacture of these plastic bottles has also gone up from 14% to 23%. Now, if I am to critique this information, I need to evaluate this. Was it 14% last year? Is it 23% last year? So they're saying the total cost that was used to prepare that, out of that, 23% is recycled material. So that's something I'll have to evaluate. And I'm just going to stop here and look at, so the annotation over here is going to be linked to further information, but just stopping here to explain what we're going to do. We're going to read through the rest of the scenario. We're going to find out what the total cost was, find out what the recycled material cost is, and confirm this was 14%. And it will come up to 14%. But then when I do it for this year, the recycled material cost divided by total cost, instead of 23, it'll come up to 18%. So I can't really switch between the screens continuously for the recorded video, but I'll show you when this information comes up. But my first thought process should have been, that's what they've said in their report. I need to confirm this is the correct percentage of recycled material when compared to the total material that was used. Then they've spoken about the percentage of bottles recycled versus number of bottles recycled. They have not given comparatives, which was quite concerning, but I have enough information to calculate this myself. So I am going to calculate the number of bottles that were recycled last year. I am going to calculate the percentage that translates to and see if it has actually improved. So in the next screen, wherever you see this triangle in blue, that's where my working is going to be. Then we've already said that I'm concerned. I need to apply skepticism about the fact that information has not been shared. In my answer, I am going to be a tattletale and communicate this to those charged with governance, right? So I'm going to go and tell those charged with governance that, by the way, this information has not been shared with me. And this is interesting. Now, when you read through the information, it says grants and donations are subsidies paid by the client to encourage the recycling of bottles. The bottles are recycled only using this subsidized network. So which basically means if the number of bottles have gone up, that they've said they have, then the grants should have gone up as well. And if I look over here from 240, it's gone down to 227. So when I look at this analytically, bottles have gone up, donations instead of going up have gone down. This basically means lesser recycled material is being used in bottles. So this decrease, the one written in red, is my own evaluation. So I am going to try and not panic in the exam. I'm going to take each part of that information given one by one. So I'm going to evaluate whether what they have said about the increase in recycling makes sense. I'm going to do my own calculations and find out what the comparatives are. I'm going to, of course, report the delay or the lack of information to those charged with governance. And I'm going to talk about the grant donations and how the decrease doesn't make sense when bottles have gone up. So all of that planning is basically now happening. As I read the rest of the information given, I'm doing some more calculations, and this is where my answer is now materializing. The bottles have gone up by 12.4%. That's the number of bottles sold. This is what I'm going to link to the donations. They've given information about the new plastic material plus the recycled material, and this is what it adds up to. So new plus recycled, this is the information. So I can do my calculation now. So last year, the recycled material was 14% of the total cost. And this year, when I do a calculation, it only comes up to 18%. Remember, they've reported that it is 23%. I now know that is incorrect. So this is how I've actually identified that they're lying in their report. They've also said that they The price of the materials has remained stable year on year, and this has been verified by the work completed during the audit. So that means this change in recycling isn't really making sense to me. This was my further answer regarding the recycling volumes and rates. Remember, they've changed the metric, but I can do my own calculations. I asked you to keep an eye for this triangle, the blue triangle. Yeah, I was just going to make sure it was a triangle. Yeah. So if I do my calculations, last year they had the percentage was 3.3%, and this time around, instead of a percentage, they've said this is the number of bottles that were recycled. I could work it out myself. I can find out what the bottles were last year. I can calculate the percentage change, and this comes up to 452.1 bottles last year that were recycled, and then the change is 2.7%. So I've used the information given. They've given information for the total number of bottles. They've given information about the percentage that was recycled. It was quite nice and simple. And then I could just simply do a percentage change to find out the percentage that was recycled this year. And I am, of course, not taking into account the opening or closing inventory of bottles, but there is a concern about inconsistency. So this is really where my answer is starting. I'm going to start by talking about the biggest concern that I had, that was around the comparatives not being there and whether this was genuine. I'm going to start typing my answer. So this is my skepticism, by the way. I've explained the fact with all calculations, which gets you your technical and professional skills marks. And I'm going to basically say that this suggests that the information that there has been improvement in recycling is potentially not correct. And the decrease in grants also supports this. So each answer that you see on your screen is going to be a separate mark. We can now start typing this up. Again, I'm not going to read through this because we've done this discussion, but let's just focus on what the key areas are. The number of bottles have increased. It would be reasonable to see an increase in donations. However, they have gone down by 5.4% instead. They are only recycling through this subsidized network, and therefore I need to apply skepticism and understand why this has happened. So this indicates that the company is investing lesser in their recycling partner. So all of this is my answer. Regarding the change in metric, we've done that evaluation. The change in presentation is not immediately clear. I'll have to apply a higher degree of skepticism so I can investigate what that problem is. The change of metric does not have any explanation in the notes. So this could be deliberate manipulation because they do have an incentive because of the RGW certification. And then I'd support that with all the working that I've just showed you, right? Moving on to the percentage of bottles which have been recycled, they've said it is 23%, but when I do my simple calculation, it comes up to 18%. The audit work has verified that there's not been a lot of fluctuation in cost, and we can support this through our own working as well. So the total cost per bottle has not changed, which means that I cannot understand why they are reporting the 23% where it should be 18% instead. So I'm applying skepticism and giving them reasons for why I think this doesn't make sense at all. Again, just winding all of this up, the reluctance of the manager needs to be reported. I'm concerned that they aren't sharing information with me, so I need to apply professional skepticism. I will have to try and use other methods for verifying this information, and this can be or must be escalated to those charged with governance. So this was basically, I know it was a lot more than 8 marks, but remember, we already have additional professional skills marks for this. So this was a very in-depth evaluation of the information that was given. So if you look at this, this requires no sustainability knowledge at all. This only tests your ability to apply professional skepticism and critique the information that was given in the scenario.